The National Futures Association, a body of the CFTC, has granted Coinbase approval to list crypto futures on its exchange. This will be the very first regulated crypto exchange in the United States to offer these types of futures contracts. Let's dive into what this means for the crypto market, what this means for Coinbase, and what exactly are futures. But stay tuned, because at the end of this video, I'm going to show you a massive mistake that I made while trading, and hopefully you can learn from this and not make the same mistake that I did. This is very relevant to today's news and you won't want to miss it. In a move that's sure to please crypto traders, Coinbase has received regulatory approval to offer US retail customers regulated crypto futures. This means that beginning in the coming months, American investors will be able to trade futures contracts on Bitcoin, Ethereum, and maybe other crypto assets on Coinbase's platform. Coinbase in early 2022 purchased US-based derivatives exchange FairX for a whopping $275 million. They then renamed it to Coinbase Derivatives Exchange with the aim of listing futures contracts and potentially other derivatives at a later date. Let's take a quick look at what's happening to Coinbase's stock on the announcement of this news. As you can see, right before the announcement was made, we had a 1-hour close at around $79, and immediately after the announcement was made, it shot up to almost $83. Since that time, it started selling off on the news. If we go back almost exactly 1 month to the hype of all the Bitcoin ETF announcements, we'll see that the price shot up to $114 per share. The price is down 24% in just the last month alone. Okay, so what is a derivative and what is a futures contract? A derivative is a sale agreement of an underlying asset or group of assets between two parties. That means that the asset itself is not traded, whether that's gold, oil, lithium, or in this case, Bitcoin. Common derivatives include futures contracts, forwards, options, and swaps. A futures contract is a derivative agreement between two parties to buy or sell an asset at a predetermined price on a predetermined date in the future. The asset that's being traded is called the underlying asset. The buyer of the futures contract is obligated to buy the underlying asset at the agreed upon price on the delivery date, and the seller of the futures contract is obligated to sell the underlying asset at the agreed upon price on the delivery date. It's worth noting that most futures contracts are usually leveraged, meaning that traders can go into a trade with less equity and come out with more than they would with just a spot trade. Coinbase will be the first regulated exchange in the US to offer leverage on its exchange with these futures instruments. Guys, I cannot stress this enough. Trading with leverage is a very, very risky business. Getting liquidated is only one click away. I do not encourage anybody out there to trade with leverage unless you are a very experienced trader. And even then, the majority of traders lose. For every one winner out there, there's 10 people who have taken a loss. I saw a hilarious joke today that's completely relevant to today's topic that I wanted to share with you all. What do you call a crypto trader who loses money on futures? A future X trader. Okay guys, as promised, what was the massive mistake that I made that I'm going to share with you? I put out a video about the Coinbase stock 9 months ago when I started purchasing shares in Coin. My entry price was around $60 and I've continued to purchase shares monthly. My average buy-in is currently around $58. However, my mistake that I alluded to earlier is that when the news broke about the BlackRock ETF and Coinbase was listed as the custodian for the ETF, I didn't take any profits. The price of each share skyrocketed to $114. And in my gut, I knew that this pump wasn't going to last forever. After all, the crypto market is still down by nearly 80% from all-time highs. This directly correlates to the business model of Coinbase itself. This is a great learning experience for those of you out there. Learn from my mistakes so that you aren't leaving money on the table. Take profits, even if it's only a 2x. That's honestly a godsend in a bear market like this. Most people in crypto are looking for those 100x's, those 1000x opportunities, but are missing out on the smaller, more guaranteed opportunities that can add up over time. Wealth is not built overnight. It comes with patience and understanding of the markets. So please, for the love of God, take profits when profits are available. Thank you so much for tuning in to today's video. If you enjoyed it, please be sure to hit that like button to let the algorithm know that I'm doing a good job. That's going to be it for today's video though. Crypto Clay, out.